Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Tuesday, the 16th of September. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, Keir Starmer rolls out the red carpet as Donald Trump expects to announce deals worth more than $10 billion during his state visit to the UK.
An appeals court blocks the US president's efforts to fire Federal Reserve Governor Lisa Cook ahead of tomorrow's interest rate decision.
Plus, more capital or a new headquarters abroad. Could UBS really take the nuclear option in its showdown with the Swiss government?
Let's start with a roundup of our top stories.
Economic deals totalling more than $10 billion are expected to be announced during US President Donald Trump's state visit to the UK, which begins later today. It comes as London's financial sector called on the government to go further to attract private investment into British assets. Bloomberg's Tiwa Adebayo has more.
A science and technology partnership plans to build nuclear power stations and deeper financial connections. Just some of the goods on offer to the UK as Donald Trump's US delegation prepares to visit. But whilst Keir Starmer gears up to host discussions with the president in the English countryside, the country's financial hub is calling for change. According to a City of London Corporation report, the UK faces £150 billion in unmet funding needs over the next 5 years. The financial district's governing body are calling for measures to steer pension capital into UK equities. This just weeks ahead of an autumn budget that economists widely expect to hike taxes to fill a fiscal hole. In London, Tiwa Adebayo, Bloomberg Radio.
Well, staying in the UK, the Prime Minister Keir Starmer has lost a third key ally from government in less than 2 weeks. Starmer's Director of Strategy, Paul Ovenden, resigned after sexually explicit comments he made in 2017 were published by ITV News. The senior advisor's exit comes after Starmer lost both his Deputy Prime Minister and Ambassador to the United States over separate scandals. In his first public comments since he fired Ambassador Peter Mandelson, the Prime Minister says that Mandelson's ties to Jeffrey Epstein made his position untenable.
Had I known then what I know now, I'd have never appointed him. Because what emerged last week were emails, Bloomberg emails, which showed that the nature and extent of the relationship that Peter Mandelson had with Epstein was far different to what I had understood to be the position.
But Starmer's decision is likely to be a sore point during Trump's visit, given the US leader's own struggle to move on from questions about his ties to Epstein. The loss of so many senior figures in a short time in the UK is leading some to question how stable Starmer's own position is, despite his large majority in Parliament.
A growing number of economists believe the Bank of England has finished cutting interest rates as it grapples with a fresh spike in inflation. Figures due out tomorrow are expected to show inflation peaking at 4% this month, double the bank's target. Bloomberg's Freddie Fulston has more.
Economists surveyed by Bloomberg say they believe the BOE will keep rates at 4% for the foreseeable future. The group, which includes Santander, Schroders and others, unanimously believes rates will stay on hold this Thursday. The prospect of limited further rate cuts, or none at all, will pile further pressure on Chancellor Rachel Reeves, who businesses blame for fueling inflation with her £26 billion tax hike on employers. In London, Freddie Fulston, Bloomberg Radio.
Now, officials from the US and China have reached a framework on keeping TikTok running in the United States. The deal was reached during talks in Madrid, with Treasury Secretary Scott Bessent confirming a plan for US ownership of the app. CBS News reports that Oracle is among a group of firms that could enable TikTok operations to continue. The framework sets the stage for a phone call on Friday between President Trump and President Xi Jinping. Donald Trump spoke to reporters in the Oval Office.
It's important, and it can maybe even bring us closer to China. We had a very good meeting with China. I was surprised. I didn't expect it to that extent. And I'm going to speak again with President Xi on Friday, and I think that'll confirm things up.
That was President Trump speaking there. China's Commerce Ministry called the deal a consensus, though some technical hurdles remain. The breakthrough could unlock a long-awaited Trump-Xi summit at an Asia-Pacific Cooperation Forum in South Korea, which will take place at the end of next month.
A federal appeals court has rejected President Trump's bid to unseat the Fed Governor Lisa Cook ahead of the rate-setting meeting. The ruling makes it more likely that Cook will take part, although Trump could still ask the Supreme Court to intervene. Meanwhile, the Senate confirmed Stephen Miran as a Fed governor. It'll pave the way for Miran, who's currently Trump's economic advisor, to join the policymakers. Here is Bloomberg's Katerina Sareva.
We haven't seen a huge market reaction yet. Even when he was first nominated by the president, there wasn't, some massive reaction. And that's kind of been kind of interesting, right? People have thought that maybe we would see a bigger reaction. Now, maybe part of that is because he is just one vote, out of 12 on the Federal Open Market Committee. So he's alone is not going to change interest rate policy.
That's Bloomberg's Katerina Sareva. Miran has said that he would take leave from his role as chair of the White House Council of Economic Advisers, but not resign. It'll be the first time in 90 years that a sitting White House official will have a role in setting monetary policy.
Elsewhere, Deutsche Bank says that international investors are slashing their dollar exposure at an unprecedented pace through currency hedges for US stock and bond purchases. The bank says that for the first time this decade, flows into dollar-hedged ETFs that buy US assets have exceeded those in unhedged funds. Writing in a note to clients, Deutsche Bank's global head of currency research, George Saravelos, says that he believes this explains why the dollar remains weak despite international investors ploughing money back into US assets.
Wall Street's main regulator says it's prioritising President Trump's proposal to reduce the frequency of corporate earnings reports. The SEC says it's pursuing plans to, quote, further eliminate unnecessary regulatory burdens on companies. It follows a social media post in which Trump called for an end to quarterly reports for investors. Research Affiliates chair and founder Rob Arnott says the move could increase companies' long-term focus.
I'm a libertarian. I prefer to let people and businesses do what they want. I think a requirement of every 3 months, fine, lift the requirement. If a company wants to report every 6 months, every 12 months, that's fine. Publicly traded, it ought to report at least once in a while. But a requirement for quarterly reporting increases short-termism. I've often said that I will never, ever work for a publicly traded company again. I've been saying that for a quarter century. And the reason is regulatory distraction and short-termism.
Research Affiliates chair and founder Rob Arnott there, as supporters of quarterly reporting say it's crucial for keeping investors informed and reduces the chances of market manipulation.
Those are our top stories for you this morning. Let's look at the markets where you have very bullish stock traders. Asian stocks hitting a record high. MSCI Asia Pacific Index is up 0.7%, 10 days of gains in a row. The S&P 500 above 6,600. Again, on a stellar run, the expectation of a Fed rate cut on Wednesday, softer labour market conditions and no big inflationary surprises. Gold has also climbed to a new record this morning, $3,683. We're up by another almost 0.2%. Treasuries are steady today. 2-year yields hovering near their lowest since last September. The dollar's also sliding, and we get US retail sales data later on today. Those are the markets.
In a moment, more on what to expect from Donald Trump's state visit to the UK, plus the options being considered by the Swiss bank UBS as it faces a massive increase in capital requirements. But another story that we've been reading this morning, perhaps an optimistic spin on AI creativity. Karen, I feel like you and I are the AI curmudgeons, essentially, in this world. I mean, maybe it's just me, but who worry about us being inundated with AI slop. But Brad Stone is the editor of Bloomberg Business Week, has been writing about how the AI-generated content in social media, I suppose he's looking at it from a boon in creativity point of view.
Yes.
This is something, to be able to create the great AI content, you still need to have imagination to begin with. And he talks about one example, which is this 8-second clip of rabbits bouncing on a trampoline outside, made to look like grainy security footage. It's in 8 seconds, one of them disappears, and this caused a massive furore, I suppose we describe it as online. People got very excited about where was the rabbit, how could it have disappeared, people guessing before it was flagged as being AI generated, how it could have been done.
And not just a few people, this is millions and millions, 230 million times this little video has been viewed around the world. Look, even I have been sucked into watching these AI videos on TikTok and elsewhere. I mean, the talking babies phenomenon. Yes, I think basically sometimes quite
talking
funny.
Dogs. There's a talking dogs as well.
Yes.
There's a dog podcast. It's called a podcast.
I mean, look, they're cute. They're a bit creepy. They're a bit weird. Yes, it is creative, but it also does suck up a lot of time, doesn't it? And it's advertising at you.
But I suppose the argument made by one of these creators that spoke to Brad for this piece is this better than us just being marketed really fancy things that make us feel bad about our lives? Wouldn't you rather see a dog talk than feel bad that you can't afford that, car/house/watch/holiday?
Yeah, look, I have less qualms about it because, of course, they're AI generated. So the babies and the dogs are actually not real babies and dogs. They don't belong to anybody. So actually, you're not infringing on their privacy, I suppose. It's just weird.
Yeah. Such a good point to end a conversation about AI generated content. It is just weird. You could read Brad's piece. We'll put a link to it in our podcast show notes, and it's on Bloomberg.com as well. Well, let's bring you more now on what to expect from the US President's state visit to the UK, which begins later today. Our UK politics reporter James Woolcock is with us for more. James, talk us through then. What are the expectations around this visit?
I mean, look, we're expecting 3 days of pageantry. Donald Trump, the US president, set to arrive this evening, and we're going to be getting a carriage processions, royal salutes, and a state banquet. But behind these ceremonial events, it's an opportunity for both diplomacy and for business. Alphabet have already announced this morning they are investing £5 billion into the UK's growing AI economy. Bloomberg have learned that over the next few days, further multi-billion-dollar UK investments are expected from US companies, totaling as much as 10 billion, if not more. Now, this is going to be a big deal for Keir Starmer, who has talked up both his relationship with Donald Trump, the US president, and also his ability to get foreign direct investment into the country. So in some ways, this is going to be a good news story for a prime minister who has been struggling in a few weeks of difficult headlines.
Absolutely. And if it boosts economic growth in Britain, I mean, surely that's the mandate that the government was elected on. Everyone will cheer that if that is what flows from this. But I suppose it's also there are some awkward elements to this. I mean, it is also awkward for Keir Starmer, obviously, from a party on the left. There's the Mandelson scandal. There's lots of other issues that could emerge over the course of these 3 days. So lots of FaceTime, but also lots of opportunities for things to go wrong, I guess.
Well, I mean, like you say, the ghost at the feast, or the ghost at the state banquet, maybe I should say, is Peter Mandelson, who was until last week Britain's ambassador to the US, before a series of emails reported on by Bloomberg laid clear the depths of his relationship with the disgraced financier Jeffrey Epstein. Now, look, losing your ambassador before a visit from the leader of the ambassador to the country is, by any metric, a diplomatic faux pas, sort of in the Gallery Hall of Fame. And so much of the state visit is a gambit by Britain to say, we will put our all into winning over one very powerful person. And this is always how the sort of UK establishment has done it. In exchange for, if we put everything into impressing US President Donald Trump, we will get, hopefully, the sort of system goes, economic or diplomatic coups. And so the whole point is then to make sure that US President Donald Trump has a good time. And so to that thing, things that could sort of derail here are any sort of difficult questions about Epstein or Mandelson at the press conference, but also questions around sort of Vice President J.D. Vance's concerns around UK free speech. That's been a big MAGA issue. Tesla CEO Elon Musk just over the weekend made some incredibly incendiary remarks the UK politicians here have already all condemned in the mainstream. We're talking Liberal Democrats, even Nigel Farage from Reform UK. There's also the risk of UK protests. I mean, in Trump's first term when he visited, there was a now infamous blimp of Trump shaped like a baby that flew over London, which he then commented on in an interview with The Sun. If the whole point of this is for Keir Starmer is to have deliverable gains. So for the UK public, if at the end of this summit, the state visit, there aren't deliverable gains, that also raises questions about his efficacy.
This is all happening at a time, James, when Keir Starmer has seen plenty of upheaval in his own team, and there's yet more of that today.
Yes, I mean, look, 2 weeks ago, after a very difficult and bruising first year in government, Starmer declared the start of phase 2. It's going very well. So far, he has lost his deputy prime minister. He has sacked his US ambassador. And as of yesterday, we can report that also he has sacked one of his most senior aides, Paul Ovenden, after a series of sexually explicit texts and emails from 2017 were published by TV. From the people I speak to in Labour, the level of exasperation towards the Starmer sort of project is at a current all-time high, because the problem they see is they don't yet see a way out of the sort of sudden collapse in the polls over the past year and what the turnaround plan is. And 2 weeks ago was supposed to be the start of the comeback plan. It has been derailed at quite an incredible pace. The question is the state visit by Donald Trump a further extension of the recent negative domestic headlines, or a chance to actually be a good news story that's been in the works for months with good economic stories to turn all around? The next 3 days, and a very mercurial US president will decide.
Yeah, it's going to be absolutely fascinating, isn't it, to understand where those US deals are going to be in technology and nuclear power and other parts. Thank you so much to James Woolcock, our UK politics reporter. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
To Switzerland next, where lawmakers have voted against a second attempt to delay stricter bank capital quality rules. The changes will lift UBS's capital requirements and are part of bigger reforms which will see the Swiss lender set aside some $26 billion more. That's left executives at the bank considering options including moving its headquarters out of the country. Our Swiss finance reporter Miriam Belazou joins us now for more. Miriam, good morning. How significant, first of all, are these changes in capital rules for UBS?
It is a big deal for UBS. It is actually something that sort of is distracting the bank a little bit at the moment as they focusing on the integration of Credit Suisse. So these changes, there's a bunch of proposals that the Swiss government has made. I'd say by far the most significant part of this proposed change is the measure that would require UBS to increase the amount of capital held at its Swiss-based main unit against potential losses at foreign units to 100%. So the government has sort of estimated that this alone could increase UBS's capital requirement by as much as 26 billion. So higher capital requirements can make a bank safer, that's for sure, and that's the thought process. However, it can make it less profitable, and that's where the concern lies for UBS. So it's a bit of a conundrum because obviously the Swiss government wants all of that risk to be deducted from the parent's capital, the parent's bank's capital, meaning that UBS is already sort of prepared to shoulder major losses should things go badly or badly wrong at any of its units worldwide or any of its business divisions. So basically, the Swiss government wants UBS to shoulder any of the costs should there be an issue. And bear in mind, we've witnessed the collapse of Credit Suisse not so long ago, so it's still very raw.
And in terms of what that means for CEO Sergio Ermotti and the likely options that are now being considered by UBS, as this has been something of a long-running process, what next? Yeah,
that's a very interesting question. There's still the drawing board at the moment. They are looking at a variety of options, and everything sort of ranges from some very sort of mundane technical exercise that would get them to this amount. There's something called upstreaming, where the company could also set aside some money each quarter and eventually get there, because this proposal, bear in mind, this is a very lengthy process. It could take 6 to 8 years until it comes to fruition. So there's time to sort of play around with technicalities to get to that 26 billion. There's also other kind of financial tools such as SRTs that the company is looking at. So these are the most sort of smaller, mundane ways to get to that amount. But there's also ways that are a bit more radical that some people within the company think should be explored. So we looked at potentially spinning out some parts of the business that are dragging the whole group, or even looking at M&A. They need to bolster their presence in the US, for instance. In the longer run, will bring them more capital. And there's also obviously the option of simply relocating, so to go around the Swiss regulatory hurdles. So they were looking at, we had reported that a couple of months ago that the company was looking at moving its headquarters, and they're now looking at jurisdictions such as the US, for instance. But again, from our reporting and our sources, these are options that are not ideal for the bank, that are not preferred either. Same as shrinking, like Sergio Motti has said previously.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.